What's going on, everybody? Just going to be a quick recap on the Iran crisis, the war, whatever you want to call it, and how the markets are responding. ES, NASDAQ, we're going to talk about oil, both CL, which covers WTI oil, and BZ, which covers more of the global supply of oil around the Brent oil. And I'm going to talk about some correlations between these oil tickers and the markets, the equity markets in the US and basically globally. We're also going to talk about gas prices and all that stuff as well. Let's get into it. So starting off, I made a little dashboard here, a little workspace, whatever you want to call it, that showcases all the things that we need to cover in today's video. So starting from the top left, this is the ES S&P 500 futures. If you guys watch my live stream, this is basically what we cover every single day. And below that, we have a correlation coefficient, basically showing the correlation between the S&P 500 and CL, the oil prices. This is the most liquid oil trading instrument in the world, which does cover WTI, which is US oil instead of the global oil, but we'll get to that here in a little bit. So comparing ES, the S&P 500, to oil, there is a very, very strong inverse correlation right now, which is negative 0.91, and this is over the span of about 21 candles, which on the daily is about 3 weeks, if you don't count when the market is closed for the weekends. So what we're looking at here with the correlation is, if you guys don't know how to read a correlation coefficient, if it is near 1, that means that there is a positive correlation, meaning they are moving together. If one of them goes up, the other one goes up. With a negative, like a negative 0.91, like we currently see, that means they have an inverse correlation. If one of them goes up, the other goes down, and vice versa. So right now with oil, there is a very strong negative correlation, meaning if oil continues to rise, the markets will continue to fall, as long as that correlation is still as strong as it is right now. Moving on to the top right, same exact thing on NASDAQ. So this is the NASDAQ 100, and this is also a correlation coefficient with oil, which you can see is at negative 0.68. So there is an inverse correlation with NASDAQ, but it's not as aggressive as the one that we see on the S&P 500. And that's partially due to because the tech stocks have been having some strong days recently, obviously not very strong days because we are pretty bearish. But the bullishness of the tech stocks is trying to counter the bearishness from oil. So that's why the correlation is not as strong on NASDAQ right now. And also, there's just a lot more oil companies in the S&P 500. So it's more closely tied to how oil is moving. Okay, so another thing we're looking at down here on the bottom left is CL, which is the most liquid trading instrument in the world that covers oil. This covers WTI oil, which is essentially US oil. But because it is the most liquid trading instrument in the world for oil, you basically cover the global price of oil. So what I have on this chart to show you the difference is the regular candles is that CL price, and the pink line here is the Brent crude price. Now, one thing to look at, if you guys are oil traders, you understand this. There is a spread, there is a difference between the Brent price and the CL price. And that is what I'm showing down here on the bottom. I am showing that spread between those two oil instruments. Now, typically, when the market is not in a crisis, when it's a very normal market, that spread is pretty small. So if we look at kind of back when it was very stable, the spread was only $3, $4. It was very, very low. Nothing too crazy. But when there is a crisis, that spread can get very wide. So right now, the spread is massive. It's near the highest it has ever been. We are currently looking at a $14 spread between the Brent prices, which are basically the global prices, and CL, which is essentially the US oil price. So right now we have a $14 difference, and basically you can just look at this spread as like a volatility index almost. If there is a very large spread, there is just more risk and more volatility in that oil market. So like I said, right now the spread is nearly the highest it's ever been. And finally, on the right side, same exact thing as this pink line here. These are the Brent oil prices, and I have a correlation coefficient here comparing the Brent prices to the S&P 500, which is nearly the same exact correlation as comparing the crude, light crude prices to the S&P 500 as well. Now, I'm making this video a little bit early. By the time this video is released, it will probably be around the Sunday Open. So just watch out for how the Sunday Open comes out. You're probably going to see even a wider spread on the Brent and regular crude oil prices as well. We could see a gap up here, which we're going to cover here in a second. Okay, so now that we have all these charts, let's just quickly go through some key levels to keep an eye on moving forward for this week. So looking at ES, we are basically sitting on the last major support. We started out with a little bit of a rollover top, which we had higher highs, higher highs, higher highs, but then you just started stalling on the high there, and then you had lower high, lower high, lower high, and then major lower low, and then a major retest of that lower low turning into a lower high, and then yet again, a lower low again. So recently, I would not call this like a bearish impulse just yet, but it's definitely a point of origin of where an impulse can start. So this rollover top is definitely a point of origin, basically this value right here, on where this impulse can really start to show itself if it can continue to lose these major supports back here in November and October of last year. If we zoom out, you can see there is a very key level on the chart right now, and I'll highlight this to make it easier. Look at where all this value was stalling out back in July to like September, and then we finally broke out of it kind of late September of last year. And then after the breakout, look at what happened. We pulled back to retest it and had a double bottom, which created that impulse, or I guess secondary leg, to the all-time high prices. Okay, so very key support and resistance flip around 6,500. Moving forward for this week, if we go back to our other charts here, if oil continues, and I have a bunch of alerts set for oil, if it continues to break above 100, 110, 120, we will most certainly see ES breaking the 6,500 into major supports down below. So if you guys are trading ES and NASDAQ, you need to have the crude oil, CL, or the Brent oil, BZ, chart up on another monitor or the same monitor. Just keep an eye on it. There is a significant correlation right now between oil and the equities market. So make sure you are watching that on a day-to-day basis. Even if you're day trading, even if you're scalping, you do want to keep an eye on those intraday price movements from these oil charts. So if it does continue and it starts hitting our alerts here, which could happen in a couple of hours on that Sunday Open, I would expect the next major support for the higher time frames, the daily and the weekly, would be around this low right here, which is around like 6,200. And then from that point, you have like this cluster of value right here as well, which that's around like 58 to 5,900. If you want to give it a nice whole number, you could say 6,000. Now I'm giving you very wide zones to keep an eye on because, as you guys know if you watch my stream, I am not a macro trader. I do not take trades based on these ideas of what something is going to do a week from now, 2 weeks from now, a month from now. I am a day trader. I take trades based on what is happening on the intraday. But it's always good to understand what is happening in the grand scheme of things. Are we extremely bearish? Should we mostly be focusing on taking shorts? Are we extremely bullish on the daily? Should we mostly be looking at buying breakouts, being a long trader, stuff like that. So that's kind of why I'm giving you guys these higher time frame levels here. I'm not saying I'm going to swing trade this all the way back down to 6,000, but you want to understand what is happening in the grand scheme of things. Okay, so for the first major support, keep an eye, and we can just mark it out here just to keep an eye on it. It's going to be this low right here around that 62.40. The next major support would be somewhere around this cluster. So we could say the low of the cluster is around 5,800, and then the high of the cluster is around 6,100. So around 6,000 for the middle of that zone. And then worst case scenario, this would be looking way too far ahead. I would not recommend looking this far ahead. But just absolute worst case scenario, that buyer demand way down here around the April bottom, which was because of the tariff headlines that were going on. And funny enough, there is a very obvious target here. If we do ever end up coming back here, there is a very obvious gap on the daily here, which could be filled in going all the way back down to 5,300. But I don't, like I said, I don't want to predict something like that. You guys know, if you watch my live stream, even on a day trading sense, I really try not to look further than like 1 or 2 levels out. I don't want to say, hey, we're going to target 5,400 because there's like 20 levels we could target from here to 5,400. Okay. It's like when people are day trading and they're like, hey, do you think we could get low of day here? And it's like, yeah, maybe, but then you have to get through daily VWAP, session VWAP, the POC, the value low, all these levels before you get to low of day. Okay, so take it level by level by level. But yes, worst case scenario for you doom and gloomers, you guys that really like to be bearish and you like to look that far out, I would look for around 5,400 to 5,350 where that gap fill is. Like I said earlier, I don't really consider this a major impulse just yet. We don't really see that massive panic selling just yet. We don't see that massive momentum. We're still seeing strong pullbacks, even though they are instantly being sold. We are not seeing that just absolute sell everything. Everybody's panicking. They think the world's ending, that sort of thing. Now, we are going to start seeing, we're going to start seeing more of that this next week if we lose this 6,500 level, this 65 to 64. You'll start seeing people panic on Twitter or whatever social media you look at. So keep an eye on that. Another thing to look at here is I have the gas prices. This is like the average gas price in the US. And you can see we are kind of skyrocketing on that average gas price. It was a low of around $2.65. It's gone up basically $1. And this hasn't even updated recently. The last time it updated was on Monday. So this is most likely going to be around $4 over the next couple of days. So gas prices obviously going up very dramatically with the oil prices. And this is not an exact science, but one thing you can look at if you're in the US is every $10 that crude oil goes up, it's about a quarter to maybe sometimes around a little bit more, like 40 cents is how much gas prices are going to go up. And obviously it's a very crude, no pun intended, example of that, because it really depends on what state you're in. Obviously, California, West Coast, they're going to have much more impact on their gas prices because they're just the highest in the country. But yeah, every $10 that oil moves, expect around a quarter or a little bit more for gas prices to go up. All right. That is basically it. One more thing before we go. Let's just give some levels on NASDAQ as well. I know a lot of you guys trade NASDAQ. Same exact thing on NASDAQ, but it's not so much a rollover on NASDAQ. It's more of like a double top. They tried to push up here in October, failed. Tried to push up here in January, failed. And now we're putting lower lows, and the retest is being sold with lower highs. Same thing here. It's sitting on basically the last major support, which is this support and resistance flip if you look back to August and September of last year. So if you look at this zone right here, We had this major top before we started pushing against it. Then we had a back test, and then pushed up into all-time high, creating that double top. Okay, so very obvious demand zone here. If it stays below that, which in this case is 23,700, then you're going to look for this level right here, the low of that value, which would be around 22.7. And then same thing down here. If it continues, watch the high of this value right here and the low right there. That's going to be around 22,000 and around 21,000. And then worst case scenario for the doom and gloomers, here is that gap fill. That gap fill is way down here at 18,500. Okay, and just to put that in percentage terms, let's take a look here. That would be a drop of 30% from the all-time highs. So that would be a pretty hefty drop-off from the current all-time high, which I don't really know, like I said, if we want to be looking at that level just yet. Okay. Another data point that I wanted to go over is kind of a weird one. But this is one that looks at the trading days that had to happen between the all-time high and a 5% drawdown. And pretty much every time that we've had a 5% drawdown from the all-time high, like we currently do, if it was this slow, kind of chopped its way downward, it actually did not put in that large of an impulse to the downside. Most of the time, it bottoms out and then goes back to the all-time high before being down 15%. And I know that sounds a little confusing, so let me pull this data up for you so you guys can take a look at the same thing that I'm looking at here. So this is that chart that I'm looking at. So trading days to a 5% drawdown from the all-time high. And you can just look at the chart here. A lot of the times that we pull back this slowly, the max drawdown before the next all-time high typically is not that large. It's less than like 10 to 15%, with some very obvious exceptions that were during some pretty serious crises, right? So this could be one of those times because this is a very serious move. So we have like the 2000 crash, we have the 68 crash, and we have the Great Recession in 07 to 08. Okay, so this definitely could be one of those major times, but most of the time, statistically, it bottoms out before getting below negative 15%. And that's if you're looking at it, from the all-time high. Which, where would that put us? Let's take a look here. Where would that put us on the downside here? Right around where our support levels are, so around 6,000 even. And honestly, that seems reasonable. That seems like a reasonable move here. Coming back down to 6,000, finding some buyers, maybe a little bit of a panic sell. If it absolutely panic sells, I could see a couple of major sell-off days going down to like 5,800 and then possibly coming back. Now, like I said, this is not my expertise. I am not a macro guy. I don't talk about trading like this on the long-term charts. I'm just trying to give you guys some general levels, some general areas to keep an eye on. Okay. All right. But long story short, to wrap this up here, Trump did issue an ultimatum to Iran, and he said you basically have 48 hours to open up the Strait of Hormuz, or we are going to bomb your power plants and basically just continue this war. And then Iran fired back and said, that's basically not going to happen. If you do that, we're just going to keep attacking you. So there is no de-escalation going on right now. In that 48-hour deadline, I believe, I don't know the exact hour, but it's basically tomorrow. So if nothing major happens tomorrow, then something major is going to happen on Tuesday, Wednesday, Thursday, etc. Probably some more attacks coming in. Okay. One thing you guys absolutely need to do is what I did here on my oil chart. You just need to start putting some alerts on the chart so you understand when it's going up or when it's going down if you can't keep an eye on it basically all day. I have alerts going up to like 111. Honestly, I'm going to start putting some more alerts up here just in case. Let's go 120, 125. And these aren't exact. I'm just throwing alerts up here just so I understand if I'm watching ES or NASDAQ, I'm in a trade, I get some alerts coming up on my trading view when it's going crazy. Okay, so put some alerts on there. Possibly put a correlation coefficient on your chart as well. It's a built-in indicator on pretty much every single trading platform. Correlation coefficient is what it's called. I typically, if you're looking long-term, if you're looking at like the actual correlation over like a month or so, I would leave this on like a 20 to 30 length. And make sure when you're looking at that correlation, you're on like a daily time frame. So you actually get the correlation over a large amount of days. Okay. But all right, guys, that is it. That's a recap of what you guys need to be keeping an eye on for what's going on in Iran and what's going on in the oil markets. If you guys enjoyed this video, hit that like button. Be sure to subscribe, and I'll see you guys on our live stream. I live stream Monday through Friday, 9:30 in the morning Eastern. I'll see you guys then. Peace, everybody.